It looks like everything is just starting to ramp up now. I think we are going to end the year strong, and I think the business cycle will extend into 2026. And as of today, I still don't see an end to it. I really believe we've entered a hard asset era. This is the first time Bitcoin's been around for a period like this, and I think that bodes very well for Bitcoin. I'm actually concerned for the performance of US stocks and especially US bonds. I think they're in for a world of hurt over the next 10 years.
The two buckets that have been growing rapidly over the last 2 years are the hard money assets of gold and Bitcoin. There's an exodus going on right now.
I don't think the Fed matters very much. Lynn Alden's implication that nothing stops this train. We're in a period where the fiscal policies will overrule the Fed's policies. Will we have this bear market? Almost certainly yes, but the size and scope of it depends on how much of a bull market we have.
You opted out of the broken financial system by adopting Bitcoin and taking self-custody of your money. But protecting your wealth is only part of the equation. Now it's time to protect your freedom. My family is stacking sats and stacking flags. A second passport is our hedge against government overreach and uncertainty. If you're a Bitcoiner looking for your exit strategy, our friends at CitizenX will help you secure second citizenship through investment or descent. Book your free call today by hitting the link in the show notes or simply scanning the QR code on the screen. Let me break this down for my fellow Bitcoiners. In just 8 weeks, I've seen a serious shift. More strength, more energy, and fast muscle gains. The reason? FITSCRIPT. They ran 124 biomarkers, blood, hormones, inflammation, and built a fully custom plan, nutrition, training, supplements. No guesswork, no templates. This is functional medicine meets precision fitness for high-performing men who want sovereignty over their health. If you care about optimization the way you care about your money, test, don't guess. Don't trust, verify. Hit the link in the description or scan the QR code on the screen to check out FITSCRIPT and see what's possible. Gold has been ripping for a while now, and then we've started to see inklings of Bitcoin moving. I'm looking at my block clock now. We saw 14K earlier today, and we've kind of been on that sideways, like just incessant 10, 11, 12 back and forth. And, we're starting to see some shifting there.
I think there are many reasons from a macro perspective to be bullish right now. You've touched on several of them. The first is, as you mentioned, I think the Fed has officially capitulated. I think it's pretty much a lock. When you see the betting markets kind of putting their money where their mouth is, it's usually right on. And so the betting markets also are saying probably 3 total rate cuts this year. So by the end of the year, we'll be down about 75 basis points. That's what they're saying right now. That could change if the data changes. So that's one thing. And why is that important? Because now the US is basically the last major holdout as far as central bank easing goes. Most of the central banks around the world have already started easing. They've been lowering rates for quite a while. So having the US behind that is actually a big booster in general to risk assets. When you have that kind of easing, that's just better for business, better for the economic cycle, and better for Bitcoin ultimately. By the way, these are all talking points, so I'm really looking forward to hearing what the rest of you guys have to say about this too. But so some other things that have me bullish. U.S. businesses are doing well, right? We've been seeing earnings reports, forward revenues, forward earnings, forward operating margins are all correcting upwards. They're basically shooting higher, and that's really good news. U.S. businesses, at least what I follow more closely, are doing quite well, and it looks like they're going to continue doing well in the future. So we're seeing businesses move in the right direction. There's still a bunch of people online calling for a recession. I certainly don't see that in the data I look at. Maybe I'm wrong, but I've been saying since 2023, after I got over my 2022 depression I was in, because I was pretty convinced we were going to, and I think we should have had a recession, but that's another story. 2023, 2024, 2025, no recession, and I still don't see one coming in the tea leaves that I read. U.S. manufacturing, which has been in a recession, but it's a small part of the U.S. economy, it has been basically contracting since 2022. it's finally starting, I think, to show shoots that it's going to finally recover. Manufacturing new orders recently came out for the most recent month. They jumped from 47.1 to 51.4. That just bodes well. It could go back down again for sure, but that's a good leading indicator that new orders are coming in. So manufacturing should start stepping up. So that's I'll just stop there with the macro. And then you also touched on, Ben, so I feel like I have to talk about it too. And I talked about this with Danny a few months ago. I really believe we've entered a hard asset era. So I believe that whole concept, and I see people mocking it now, which makes me feel even better about it. That whole U.S. exceptionalism concept, people are doubting the benefit of investing in U.S. assets, and so they're focusing more similar to the 1930s, similar to the 1970s, and even similar to the 2000s. There were these huge cyclical or secular time periods where people kind of lost some faith in the U.S. and they started pulling money out of treasuries, out of the dollar, out of U.S. equities as well, and putting them into things like gold, into emerging markets, into non-U.S. assets. And I think this is the first time Bitcoin's been around for a period like this, and I think that bodes very well for Bitcoin. So the hardest, soundest assets, I think, should do quite well. And I'm actually concerned for the performance of U.S. stocks, and especially U.S. bonds. Like you shouldn't touch those things with a 10-foot pole, as far as I'm concerned. So I'm concerned for my fellow U.S. Employees that have most of their money or all of their money in a 401k or IRA. That's basically 60-40 U.S. stocks, U.S. bonds. I think from a real rate of return perspective, after you factor out inflation, I think they're in for a world of hurt over the next 10 years, probably give or take a few years. And it's already started. This actually already started at the end of 2021, and we're like full into this big, huge secular trend right now. So I'll stop there.
Now, a couple things I just want to pick your brain on. So number one, and actually I forgot to, I alluded to it when I was teeing you up, but I didn't go any deeper. In regards to the inflation piece, there's currently stated deflation on the PPI and PPI core. They're expecting 0.3% and month over month, but it was negative 0.1%. So that's the one interesting metric. And I also wanted to get your take on this as well, because lumber has been tanking here. And that's, if I'm not mistaken, typically that, that pertains to things like housing and everything like that being built. And it would seem that that's way off. What's your interpretation of lumber being way down right now?
I think that it's just a reflection of the housing market here in the U.S. The market has stalled. Home builders have been really suffering. Houses just aren't being built like they need to be built right now. Everything's stalled out, right? The boomers have all the first houses and the second houses and the third houses, and they're trying to rent out their second and third houses. And no hate for the boomers, but that's kind of how it is here in the U.S. And so it's pricing out the millennials, pricing out Gen Z. Everybody knows this. So as mortgage rates start to come down, I actually expect that lumber signal, the commodity price falling as much as it has, I think we'll see a turnaround pretty soon, and we're going to start seeing a recovery in housing as the 30-year mortgage rates come down. I think home builders will start doing better. I think lumber prices will start going up. I actually expect some kind of mild to moderate inflation in the coming months as the economy picks up steam.
Interesting. I'll let Jesse and Danny, if you guys have anything that you want to tag in or mention or ask, feel free. And I see a link down there that I'll pull up in a sec.
Yeah, one of the super interesting things that I've seen over the last few days is Scott Bessent came out and said that the Fed and US monetary policy is like one of the leading causes of inequality. And like, this is something as Bitcoiners we all completely know. Ben, I know this is your show, but can I ask Jeff a question here? Because I'd be really curious to know what you think, Jeff, in terms of whether this is just going to be, if they manage to get Powell out and they bring someone else in, is it just new boss, same as the old boss?
I don't think the Fed matters very much, if I'm being honest. I think Lynn Alden's implication that nothing stops this train, she's talking about this fiscal train with these fiscal deficits. I think we're in a period where the fiscal policies will overrule the Fed's policies. So it doesn't really matter. The Fed has been a scapegoat. I think if Powell gets replaced and some new Trump appointee gets put in place, he could be the hero or he could be the scapegoat. Anytime there's inflation, they'll get blamed for it. But I honestly think the Fed is almost powerless in this situation. I think that's only going to increase or worsen over the next 5 to 10 years. I'd love to hear Jesse's take on that.
Yeah, I was nodding my head vigorously as you were talking about the sort of structural shift in asset allocations. I agree that bonds, fixed income in particular, is not where you want to be. Probably, I know, not financial advice, but you know, and I think that's what we're seeing too. So, you know, the link I sent for us to pull up here, great. Yeah, you can, if you click the image, it'll be much bigger. So yeah, this view is that in the global asset landscape chart that I put out that Saylor likes to use. I did it. So that was originally from 2023. Did a 2025 update of the same methodology to determine the numbers for 2025. And it was really interesting seeing the change from 2023 to 2025. And I, calculated that the annualized the CAGRs for those, the overall pie was growing at, I believe 7%, actually 6% a year for the last 2 years. But then on a relative basis, this was, relative to that 6% growth, this is how each individual asset bucket from my numbers has been performing over the last 2 years. The takeaway here is that, you see that bonds, fixed income, on a relative to other asset classes has been actually shrinking in terms of its overall amount of value. In nominal terms, it's been growing, but relative to total growth, it's been shrinking. And same in a smaller way for the money bucket. But of course, the two buckets that have been growing rapidly over the last 2 years are the hard money assets of gold and Bitcoin. And I think, that even though it's a 2-year sample that we're looking at here, and my methodology is, probably high error bars, I think it is probably emblematic of what's going on globally with asset allocations right now, and probably will continue given the sort of structural, shift that we're seeing, and the sovereign debt burdens, and how, true inflation I think is 7 or 8%, and fixed income, 10-year bonds, U.S. 10-year is like 4.5% right now. That's actually a slightly dated number. I'm not sure what it is. And so if you're holding those, you're actually destroying purchasing power, 2.5% a year if the M2 supply growth is actual inflation rate, which is what I think it is the case. And it seems like global capital is waking up to that reality and and there's an exodus going on right now from fixed income assets, which are really contracts for future dollars, right? And into hard assets, because those are the assets they can't print.
Man, Jesse, you make the best charts. Legendary.
Thank you.
So, I mean, Jeff, if you had to take a a wild shot at a dartboard and say how the people in the room here with us are going to be feeling both maybe end of year and early next year going into 2026, what when you look at your tea leaves and when you kind of try to anticipate, like are we looking at a positive, especially in a Bitcoin sense, last quarter of the year and first quarter of 2026? You were saying some stuff about about what you're anticipating. What is your feeling here?
So the forward-looking indicators that I follow suggest to me that we're going to have an anomaly here, similar to how we had an anomaly with the U.S. manufacturing sector being in a recession basically since 2022 and finally, possibly, hopefully pulling out. This business cycle is all wacky. And so normally, looking back 2-3 years ago, I did a bunch of research on the 4-year cycles of Bitcoin, which a lot of people kind of did, and how uncanny it was that it kept following these. It wasn't actually 4 years, it was more like 3 years, 11-month cycles, but it kept following them. And when I did my work then, that's where I came up with, I think we're going to peak around Halloween of 2025, which is coming up like 6 weeks, 7 weeks from now, at a price of about 475K. That's basically gone out the window for me because of this whole reset with the economy. It looks to me from my forward-looking indicators. So to your question, Ben, I think we are going to end the year strong, and I think the business cycle will extend into 2026, at least barring any catastrophe, black swan kind of thing. It looks like everything is just starting to ramp up now. And we're finally going to see, at least from a US perspective, the economy is really going to start ramping up. And that actually does affect, there is a correlation between what PMIs are doing in the US and the price of Bitcoin as well. And so I do think this extends far beyond, my original date of Halloween of 2025. I think we go beyond the fourth quarter into the first quarter, possibly into the second quarter. And as of today, I still don't see an end to it. So we could go even beyond the first half of 2026. And it just remains to be seen what the data shows. But so far, so good.
Do you think that on the other side of all that, are we going to see drawdowns akin to the good old bears of the past? Or do you think that maybe things are going to be a little bit more subdued in the future?
So from a behavioral economic standpoint, I think that humans will always be emotional, and I think markets will always ebb and flow based on fear and greed. So I do think so to answer your question, will we have this bear market? Almost certainly yes, but the size and scope of it depends on how much of a bull market we have. So if this bull market hockey sticks up at the end like it has traditionally done and goes exponential, say Bitcoin goes to 500K or 750 or a million or who knows what it goes to. The higher it goes, the more it falls. The more leverage it uses and the more it goes vertical, the more I think it's going to be painful on the other side of that. So those are the kind of things I look for as a fund manager. Like I want to see excessive leverage use. I want to see shorts getting liquidated day after day after day after day. And at some point, that's going to reverse and we're going to go back to that leverage long liquidation cascade where it's just as painful or more painful on the way down. I'll try to be throwing out red flags at that point for anybody. But yeah, I'll be watching for that. So the higher it goes, the further it will fall. If we just continue to grind and only barely go up and it just keeps doing what it's been doing for the last year, I don't expect a huge fall from that because there's not a lot of leverage to unwind at that point.
Saifedean said that if we only got a 50 to 60% drawdown this time, he'd be doing cartwheels. He'd be pretty.
Maybe, happy. Yeah. We'll see. We'll see what the bull market gives us.
Yeah. Fair enough. Yeah, it does feel like it's been quite a grind, and I feel like Bitcoiners that came in this cycle, they it's the old man kind of back in my day, we would see
Yes.
Bitcoin go 20x in a year. I mean, it just hasn't been that pronounced. It's just funny now looking on a Twitter feed and we budge like a couple grand, but it's like 2%, and it's just like you see the celebration and you're kind of, I mean, okay, but
Yes.
let's go. Hey, you. Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.